If you're like the majority of people, you earn a living by going to your job, working the 9 to 5, at a job you either love or you hate. Or depending on your situation, you might even be working more than one job. And that's great. You're earning a living and you're contributing to society. But there's a problem with this way of living. What happens if the company decides to lay you off, or you get fired, or you have to take a leave of absence because of health or personal reasons? Some companies might offer you, financial compensation, but a lot of people, if this happens to them, it's a financial death sentence. What's scarier, most of us aren't able to cover a $1,000 emergency, and we don't have any savings set aside for retirement. So I want you to ask yourself these following questions. Are you debt-free? Do you have $1,000 set aside for emergencies? If you lose your job tomorrow, are you able to survive for the next few months without dipping into your credit cards or going into further debt? Are you confident in your retirement plans? Or better yet, do you even know how much you're going to need when you retire? If you answer no to any of these questions, make sure you watch to the end and finish this video. Oh, and think about liking and subscribing and also commenting as well. I'm not sure if you were like me, but I always thought in order to be wealthy, you had to land those six-figure jobs and work hard, and you have to play hard in order to get to a place where you're able to live comfortably. That's the image I had of a wealthy person. That's why we all strive to land that coveted six-figure job, and most of us trade more hours by working overtime in order to get a higher paycheck. Unfortunately, I'm gonna have to burst your bubbles because that's not the way to do it. There's actually a way where you can work less, but you end up becoming wealthier beyond your wildest imaginations by simply being consistent and utilizing the resources that all of us have, which is time. If you haven't caught on by now, or you have not read the title, I'm of course talking about earning passive income through investing. Now, quick disclaimer, if you feel like investing, stock market, that's a sham or a ripoff, or it only benefits a select few and the wealthiest of the wealthiest, thank you for your views, but you can go on to your other videos that you want to watch. For everyone else, investing is the easiest, most passive way you can go onto building your wealth. I know it's easy to be overwhelmed and confused by all the financial jargon, but investing is simply using your money, having it work for you to make more money. By putting your money aside, you basically expect it to earn you more money in the future. For example, Apple is one of the most valuable company in the world. Now, if you invested just $1,000 in May of 2009, it'll be worth $1,300 May of this year, 2019. But now imagine if you put $10,000 or $100,000 in Apples back in the day. And the beautiful thing about investing is you didn't have to build a single iPhone, you didn't have to work at the Apple Genius Bar, you didn't have to manufacture anything or even worry about the business. You simply put in your money, and you invest in Apples, and you just reap the benefits because as an investor, you're a part owner of the company that you invest in. This is the wonder of investing. You pick and choose companies that you believe in and you think will grow into the future, and you basically reap the benefit by just relaxing and you collecting the paycheck. Now, 2020 is right around the corner, and maybe you spend this year, 2019, or even past years, not even thinking or worrying about investing. Well, that stops right now. Don't let this next decade, the 2020s, go by without you putting any money into investing. I hope this video inspires you to invest and start growing your wealth. And honestly, you can't even give me any excuse why you haven't started investing or why you can't even start investing right now in this very moment. One of the biggest complaints when it comes to investing, or one of the biggest hurdle, is people don't really know what to invest in. You can invest in this thing called an index fund. Basically, pick an index fund like VOO, which is a Vanguard index fund that tracks the S&P 500. Now, the S&P 500 contains 500 of the largest United States corporations like Apple, McDonald's, Intel, Exxon. And one of the benefits of investing in an index fund is you're investing in not one company, but in a collection of or a basket of companies. So for example, let's say if McDonald's suddenly go bankrupt tomorrow, because McDonald's is only a small part of your investing basket, you're not going to lose out as much. Or even if it does go down, you're not going to be hit as much because Apple and Exxon, they might pull their weight and they might go higher. So it basically averages out. The next concern might be, I don't know when to buy or when to sell a stock. Now repeat after me. It's called dollar cost averaging. This method is basically when you buy a set amount of dollars at regular intervals. So example, if you only have $100 a week, every week you invest that $100. As a result, some days you're going to invest high and you're going to buy less things, and some days it's going to be low, so you're going to buy more things. But in the long run, it basically averages out. All right, so your next concern might be, but investing is just so expensive. Let me tell you something. When I first started investing, it was with this brokerage firm called Scottrade. They don't really exist anymore. They got bought up by TD Ameritrade, and then TD Ameritrade is now bought up by Charles Schwab's. When I was first starting to invest with Scottrade, the commission, basically the fee I had to pay whenever I bought or sell a particular stock, was $5.95. And the fees used to be much higher. I think it used to be $40 or $20 for every single transaction you made buying or selling a stock. But nowadays, you don't have to pay a single thing. Thanks to free trading platforms like M1 Finance, Robinhood, or Webull, or even now, Charles Schwab's, they offer zero commission trading. You pay $0 in anything you buy or sell. So right off the bat, you are 5%, 10% ahead of what I was doing because you don't have any fees that you have to gain back. And I, for one, is very thankful that I don't have to pay those crazy amounts of fees anymore. Another complaint that people will tell you is that they just don't have any money to invest. But let's really think about it, like honestly. Do you keep track of all the money that you spend? Sure, we all collect paychecks, but for the most of us, as soon as we get the paycheck, all of the money goes out to buy things that we want, to pay off debt, that we are left with nothing. Here's what you have to do. As soon as you get your paycheck, even though it's a smaller amount, $10, $20 per week, set it aside. Use that to invest first, and whatever you have left over, you use that for your other things that you need. And I wanted you to make it a habit of going through your expenses. How much do you order on Amazon, for example? Or how much do you go out to eat per week? How much do you drink? Or what subscriptions are you subscribed to? Do you have Netflix, Hulu, Disney Plus, Apple TV? There's always something in your life that you can cut back. And if you think that investing is going to be very important, you're going to find a way to live with whatever setbacks and whatever cutbacks that you have to do. Instead of going and buying the cafe frappuccino at Starbucks, why don't you invest in Starbucks? That way, when everyone is buying coffee, you as a part owner of Starbucks, you end up getting money. Same thing with Amazon. Invest in Amazon so all those people who are getting their free 2-day Prime shipping, you get a cut of that. Don't give these companies your hard-earned money. Invest in these companies so you can grow with them and they can pay you as an owner. Alright, so you listen to what I just said and you're like, fine, I found a few extra dollars, but what good is an extra dollar gonna do? Well, let me ask you this. Can you spare $5.10? Because let's say you're currently 18 years old and you want to retire when you're 60. $5.10 is all you need to invest a day in order to retire with $1 million, when you account for the average stock return of 10%. But if you're like me and you want to retire when you're still able to do things, let's say you want to retire when you're 40 and you're currently 18 years old. In that case, you need to set aside $38.37 a day, which you might think is a lot, but if you cut back on everything that you're spending, then you're going to find a way. But whatever amount that you're starting off with, remember, it's important to just start. Even if it's $1 a day or $2 a day, all those free trading platforms, Robinhood, M1 Finance, they do these things now called fractional share purchases, which means you don't need to buy the full amount. For example, right now Apple, let's say, is $200. You don't need to have $200. You can buy a portion of Apple at a time. I think M1 Finance, you can buy $10 at a time. So every time you get $10, you put that into Apple. All right, now here's the biggest complaint and the thing that people like to talk about as to why they don't invest in stock markets. It's because of all those scary stock market crashes. In 2008, we had the financial crisis, and back then in the early 2000s, we had the internet bubble. And back in the 1929, we had the Wall Street crash as well. And of course, these instances do happen, unfortunately. Just like the stock market is going up right now, there's going to be time when stock markets go down due to crashes. And it's true, whenever these recessions happens, a lot of people lose a lot of money because of a few bad actors. But just because a few bad people do something wrong, it doesn't mean the whole system is wrong or you can't use it for your advantage. Now remember, some stocks are going to go low and some stocks are going to disappear. Companies are going to go bankrupt like we saw with Lehman Brothers in 2008. But this is why you pick and choose your investments properly. And if you don't know if you can pinpoint the next Apple, Amazon, or Google, like I mentioned, invest in a simple, clear-cut index fund. That's it. Index fund, once again, is a basket of stocks. So even if one stock or two stock or even half of the stock goes bankrupt, you're not going to lose out on all of your money. Remember, just because the recession happens doesn't mean the market's not going to recover. If you look at this graph, you're looking at the S&P 500 return. Let's say you invested $1,000 in VOO, which is once again the S&P 500 index fund, and you invested in right before the 2008 market crash. And when the market bottomed out and it started to go back up, you would have lost 50% of your value when it reached its bottom. And it's of course a scary time. You just lost 50% of your entire net worth. But it's actually only a loss if you sell your shares. Because if you're able to not be emotional and not sell because everyone is selling, which of course is very hard to do you know what happened exactly after that? The stock market recovered and is now more than 300% higher than what it was at the bottom of the financial crisis. This is why it's so important to remember that investing is a long-term game. Of course, you can make some short-term money by trading here and there, but if you look at the graph, and history is going to show us and again, stock markets always recover. Now, I'm sure for all of you watching, you're counting down the days where this decade is going to end, and you can start 2020 with a new thing. I want you to also remember that a new decade means setting yourself up for success. And one of the biggest things you can do for your future success is to invest. By doing this, you're going to broaden your horizon and you're going to open up a new world of passive income. And by doing this in tangent with you going to work 9 to 5, you're at least going to have another way, another method of growing your wealth. So if you made it this far, I wish you all to become millionaires. Of course, there are going to be a few of you who are going to be billionaires as well. But it all starts with small steps. Start investing. It doesn't matter how little you have or how little experience you have. Stock market doesn't care if you have a genius level IQ or whatever, anything like that. All it cares about is how much time you have in the market and how long you leave that money in there for. Even though you might have $1, $2, or $5 a day, that money is going to grow exponentially thanks to compound interest. And you might lose some money in the beginning. I made plenty of bad calls in the very beginning, but I'm now consistently making good returns on my money. I wish you the same. Don't forget to invest. And I hope 2020 is the best year and the best decade you ever had. Alright guys, thank you so much for listening. And if you liked the video, don't forget to hit the like button, subscribe, and leave a comment on when you started investing and what stocks you're going to invest. And if anyone has any questions at the bottom, I'll do my best to answer, and let's help each other out. Thank you so much for watching again. Have a great day, and I'll catch you in the next video. Alright guys, bye.